Good morning, traders, and welcome to Phoenix Blue's morning update on Thursday, the 19th of May. I hope you're all well today and you've had a great trading week. Here at Phoenix Blue, we have had a storming week, in fact, in particular yesterday. Yesterday was a fantastic day, especially for all of the Protégé delegates that came along to the boot camp. And we will, in fact, I will discuss that as we go through the charts. First things first, let's just have a look at the indexes. Starting off from the US close into the open of the Asian session, we can see there was definitely a slide in a few of the main indexes. The S&P and Nasdaq did recover towards the end of the session, but there was definitely some dips, I think it had a tumbleweed effect onto the Asian session, as we can see with the Asian session. And so far, here in Europe, we've seen a slide across the board. Now, predominantly, this is coming from the June rate hike, and effectively what's from the FOMC announcement yesterday at 7 o'clock BST yesterday. They were led to a conclusion that a June rate hike is most likely probable, and if this new quarter, or the last quarter, is as strong as the data predicts, and other data coming in, or fresh data coming in over the next few weeks, does support that argument, then most likely they're all concurring that a June rate hike is going to be a probable course. I think the only thing that we can take away from that is it may get pushed back a month. Now, there was some debate in regards to if they should push it back to July, purely from what happens, and they want to see what happens in terms of the referendum here in the UK. With the whole Brexit scenario, are we gonna, is Britain gonna stay in Europe? Are they not? If that has a knock-on effect onto them, and how they should act accordingly. So, by the looks of it, it does look like we're going to get a rate hike. That means a very, very strong greenback. It means that the dollar is doing very well, in fact, and that has a knock-on effect to all of the pretty much the whole world, in particularly a lot of these markets, and this is why we've seen a slide from yesterday. Moving on, what I want to do is just have a quick look at what announcements we have later on today as well, just so you guys are aware. We have some key data coming out on GBP, which had a storming day yesterday. Really did pick up the pace, and obviously we've got the Philly Fed manufacturing index and unemployment claims coming out at 1:30 BST. They're the key announcements. Obviously, we've had the unemployment and the employment rate out from Australia. As we can see, the data's on our screen right now. Not too bad, not too far from what was actually predicted. And in fact, what we're going to do is we're going to go straight over to that Australian chart right now. So as we can see, with where price action is, we're just having a look at a small time frame right now. We're having a look at a 15-minute time frame, and if we go back to when that data came out, we saw a spike in and around that period, and then after that it's just continued on its merry way. Now, with the way, most certainly with the way the Australian dollar is panning out, we should most likely see definite weakness in the Australian dollar, especially with what's happening with the USD, but more so, we think here at Phoenix Blue, we think the Australian dollar is very susceptible right now to change, and particularly with the slowing growth in China, that is having a huge knock-on effect onto the Australian dollar, and most certainly we're taking it short. It's a nice easy trade, be it intraday or end of day. You just need to find some good strong levels and then find a way in. The Canadian dollar, very similar here, very similar scenario. Again, having a look at the daily, we can see that we've had a look at a retracement. But again, potential opportunities on the Canadian dollar that no doubt that you guys will evaluate, and if you follow any of our groups or watch lists, then you will understand exactly how to get into this. We were briefly talking about the boot camp that happened yesterday and all the protege delegates, and I just want to show you guys a trade that was taken yesterday, which did exceedingly well. For those people that don't follow us on social media, you would potentially miss this, but this was a 4% trade or 4.5% trade from yesterday. This is an hourly time frame. It's still going, it looks like, because GBP is most certainly picking up the pace, and the Australian dollar is losing ground. So this chart was a win-win situation for us. Just literally all we've done is just taken a pullback off a level of support and resistance, looking at price action as well, and it just found a way in, and that was a beautiful trade that had really made us a very, very good margin quite quickly. Going over to cable right now. I think we should just have a look at that before we wrap up, and we can see from the data that was released this morning, it has had a slight effect, slight pullback, and then as we can see, we had this doji bar, and GBP is again off on its merry way, making ground against the greenback. What we should have a look at in this scenario is also how price action has been performing over the last few weeks, and as we can see from the tail end of June, we've just seen a resurgence in sterling. It's picking up the pace and it's creating higher highs, which is a very good sign. Most certainly, I will be looking to trade this long, in particularly if we get more momentum on the side of the UK staying within Europe. I think most certainly what we will do is we will see a surge in sterling against the dollar, regardless of whatever happens. Might obviously looking at a few dips on the way, based on data coming out from the US and how the greenback is performing, maybe an area of consolidation. But stay tuned, and we will let you know in all due course. Okay, guys, until next time, happy trading. Goodbye.